The stock market explained for dummies. First of all, you guys are too hard on yourself. You're not a dummy. All right, just because you don't know something, you don't know it yet, and obviously you're no dummy because you're looking for explanations. You're trying to understand. So, props to you, and let's not call ourselves dummies anymore. Okay, let me explain to you as best I can what the stock market is. I think the first step of understanding what the stock market is first understanding what stock is. So let's look at it this way. If you were to start a business, you would be 100% owner of that business. Maybe you're mowing lawns, maybe you're making necklaces and you're selling them, or you're just making lemonade and selling it on the side of the road. Maybe you're a babysitter. I don't know. There's a lot of different businesses you can start. So a lot of businesses are just sole proprietors, which means there's one owner. Now, if it's just you and you're growing, you may have to bring on a partner, or preferably, if you can afford it, you're going to pay employees. But sometimes you have to have somebody else come in with capital, money, and they'll help pay bills and they'll help the business go, especially if you're growing at a fast rate. But there are other companies that have lots of owners. And so imagine you have a company here, and then you have 2 owners, 4, 8, 16 owners. Okay, so now we have our business that's been split up into 16 different parts for 16 different owners. Now, every owner will have a piece of the business. They own a certain percentage of the business. Now, to make things easier, we're just going to say every owner owns the same amount of said business. And when you own a part of a business, to prove that ownership, they have something called a stock certificate, saying that you have stock, you have equity in this company. There are larger businesses that have lots of ownership, and there's lots of different owners. And so every owner will have their stock certificate, which shows how much they own. There's 2 different types of stock businesses. There's privately held stock in businesses, and then there's publicly held stock in businesses. So privately is most of the ones that smaller companies that are in your area that are owned by one person. It's private. You don't get to see his financial statements. You don't get to look. He's not audited by the SEC, and they're on their own. So if you hired a painter and it's just him or him and his brother, or maybe it's a family business, you're not going to know any of that stuff because it's private. It's frankly none of your business. But if you were to open up your company to the public and you were allowing more investment into your business, you would issue stock to the public. And they would then have the right to see how your business is doing. You have to disclose certain things, and your financial statements would be available to everybody. And you just become public. But the purpose of doing that is to raise funds. So they're selling off equity portions of their business, part ownership to other people, and then they get all that money back into the business and they're able to grow. Maybe they start another location, or they hire more people, or they start doing their own manufacturing, or what have you. They've sat down and they've realized, hey, if we generate more income, if we sell part of the business to other investors, that money that comes in from that will help us grow even more. So my wife's not feeling good, and I actually got to, she said I could have her chocolate that she got. This is the fancy stuff right here. Can you even see that? Probably not. This is the Ferrero something or other. I don't know. It's fancy. Look at that. So good. So now that we got a real basic principle of what stock is, it's just ownership, proven ownership of a company. Now the stock market is, well, it's just that. It's a market where people buy and they sell, you guessed it, stock in publicly traded companies. And you're publicly traded because you don't have to be a family member. There's no rules against it. Anybody in the public can buy and sell these shares of these companies. And so technically what happens is when you go to the stock market and you buy some stock in a company, you become a teeny tiny little baby owner of a massive, large company, well, I guess you could buy smaller companies, but most of the time people think of the really large companies, like the big ones: Coca-Cola, Walmart, Nike, Tesla, Apple, Facebook, all those. So there are millions and millions of shares of these companies, and but as you go to purchase a piece of the company, then you become a teeny tiny baby owner in that company, and you can sometimes vote on things. And if they pay out a dividend, which is when a company pays out their profits to their shareholders, Apple does that. I know, like I said, Coca-Cola and Walmart, they pay dividends. So if you own a share of one of those, they're going to pay you a portion of the profits. So you actually will make money just for being an owner in that company. Now, to get access to the stock market, you have to go through a licensed broker-dealer. You have to go through a brokerage firm, and there's a lot of those now. I mean, it used to be harder. You had to have an advisor. You have to have a stockbroker at one of these places that would sell you stocks, and they would make a massive commission. Now it's free. It's free mainly because of Robinhood, the app that came out a few years ago. Everybody had to compete with Robinhood because everybody was going there, because they didn't have to pay commissions every time they bought and sold some stock on the stock market. Now it's free basically everywhere. So you can open up one of these accounts, sort of like opening up a bank account. They're going to ask you a bunch of information. You put money into the account, and when the money's in there, it just sits in there as cash. And you can take that money that's in there, and you can go to the market and purchase things. And every app or website that the brokerage firms have looks a little different how they do that, but you can search for different companies, and it'll give you a share price, what it's going for. And because it is a market, like I said earlier, there's a buy price and a sell price. So you're going to see bid and ask. There's people who are out there wanting to buy the stock. There's people out there who are wanting to sell the stock. And so the bid and ask price are usually pretty close together, usually within a penny or two. That's because there's somebody trying to sell it for maybe, let's say there's somebody trying to sell a stock for $100, and somebody else is trying to buy it for $99.99. And they both put their orders out, and they're waiting until one or the other, somebody willing to pay that 1 cent more, or he or she's willing to sell it for a penny less, to $99.99. And so you're going to see the price moving a lot. And whenever a buyer and a seller match up, a transaction occurs, and you can see what the last price was. And so, in a nutshell, stock market is where you can go and buy and sell shares of companies that are publicly traded and are available to the public. And the only reason why stocks go up is because there are more people willing to buy it for a higher price. And really the only reason why it goes down is because there's less people wanting to buy it at the higher prices, and they only want to buy it at lower prices. And so why people want to buy something or why they want to sell something, who knows? I mean, it does not have to follow a rhyme or reason. I mean, a lot of times there are reasons. Earning reports come out, or the CEO quits, or there's what have you. There's lots of things that can happen that cause the stock to go down, or they acquire another company and the stock could go up. But there's really no set proven thing of why the prices of stocks go up and down. It's just a marketplace. And people sometimes are irrational, and they will buy things maybe when they shouldn't and sell things maybe when they shouldn't. And so you got to come up with your own strategy. Why are you going to be buying and why are you going to be selling? But overall, hopefully this is a helpful video to you that gets you started. And hopefully you're just a little bit more knowledgeable out of the dummy category when it comes to understanding what the stock market is. So, see you in the next video.